Vincenzo'S Go Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made computer software trading probability-based trading alert, technical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere. That's right, old Vincenzo's brought back truth and and integrity over there into the trading sphere. Right? And you can see what we got going on here is if we look over here into the gold market real quick, you can see gold in the 4-hour time frame. Actually, gold, you got to go in the longer time frame. You can see what's sort of interesting here is after this big rejection in gold, you could technically say you have a horrible looking double top, right? Doesn't that look like a double top? One rounding top, consolidation, what looked like this was a much bigger overall pattern, but it's getting harshly rejected, getting forced down. And if this breaks some key resistance, you could say this is a double top up here. And if we get some kind of liquidity crunch in the stock market, right, you could say from the top of the head to a neckline, not way down there, to a neckline. Of course, this has to make it difficult, to a neckline to the point of a breakout, right, down here. You could say we might be correcting all the way back to the 2.618 Fibonacci, or all the way down here in the 14,300 range in a big collapse in gold if there is a liquidity crunch. And in this case, the stock market would be down another 30 to 40% from its current price, and Bitcoin would probably be down 60 or 70% from its current price. And this would be a big fall in gold, something I did not expect if this does indeed happen, a 32% flush. But you can bet your bottom dollar I would be loading up the farm on some of these gold stocks. Now, is this going to happen? Probably not. What's more likely to happen is you eventually get some footing and start to break up, right? But seeing as we're getting a liquidity crunch and just looking at what I'm seeing at the top of this pattern, what looks like could be developing, that could be a double top, and that is something that we're going to watch out for, right? That's just something I'm looking out for in gold as a possible major retest of underneath support. We'll pay attention to that. Silver, I am very bullish long term, but I could see a way where this breaks all the way back down into a supply zone, and this supply zone would be all the way down here, right? If we continue to get this liquidity crunch that seems to be forming, you have a big supply zone down in here. Come on. Come on now. What is going on? Let's see. We got to turn that on. You got a big supply zone down in here. See this? You say, how do you know it's a supply zone? Well, you can see all the volume being traded in there. Look at the trading. Come on. Like it literally, that's what I don't get about TradingView. It'll grab everything except what you want it to. It's so annoying. So you can see what we got here as a rant. That's a big supply zone. And if we put the volume indicator up here in a brief time frame on this pump to current price, put that. Oh, this thing's just giving me all kinds of problems today. This is real lovely, y'all. Just all kinds of problems. I don't know what's going on with that. This thing's just giving issues today. But that's your supply zone down here. Right now, and some major support. It's actually a little bit lower down there. There's your major support down there, and that's down between 14 and 17 in a major liquidity crunch. I could see silver retesting these major lower levels, but that is not a certain. If you see what we got still on the way down, you got a bunch of fib circle support areas, and you're on your major support zone right now at about $20.50. But if you break down this $20.50, your next area where buyers could be is the top part of the supply zone and this green fib circle down here at $18 to $20. And that would be a great spot to accumulate long term on mining stocks and silver stocks, right? But I'm looking at that, and we're going to continue to just keep an eye on that. As I do think eventually this will break up, and you're going to end up somewhere up here in the $36, $37. But that might not happen for if this breaks down an extended period of time until we can start to get into the meat and potatoes and out of the beginning stages of a liquidity crisis, right? Once the liquidity crisis happens and everyone sees it and all the markets flush, gold will start taking off the other way, right? But at the beginning of it, they often go down, just like right here. You can see beginning of COVID when everybody sold off the first few weeks, gold tanked, right? Not as much as everything else, and then gold rallied, right? A lot, and that could happen this time again in a quick liquidity crunch. So I'll continue to keep watching out for that. The same thing in oil. I think oil is going to skyrocket in the next 12 months as it already came up to $138, but I think it could start to consolidate down. I could see a way this consolidates down as I've been keeping you updated, and you know Vincenzo way back here when he first came on. It's March, April of last year in 2021, January, February, March, April. Right up in here, you can see oil was 63, 64, in the low 60s per barrel. Old Vincenzo had a big target up there. Where did my target go away to? Well, the target that was up there was at $200 a barrel, and I thought by the end of this year we would hit $150 a barrel. We got up to $129 a barrel on WTI crude oil, right? But now you can see after we broke out of this rising broadening wedge, which is a bullish continuation pattern, and then we broke way above it on the breakout, 41% higher actually after we hit it once, twice, three times, and the fourth time he broke out once, twice, three times, fourth time he broke out, right? You see that? Everybody sees that, right? But then you trade it back down, and this $105 markup there was an old high from the last time we were up this high, and then you blew by it, came back down to it, came into the moving averages, got supported, and now you've been chopping up and down here, right? But what could be going on here is this could be a big topping pattern. And you briefly, so far, have got supported on this old resistance. See this? Let's make that bigger. This used to be resistance, 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 and then blew by it. Now it's support, 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 support. See that on four times? Well, if this thing comes back down into here, like you've seen on so many other things out there, a big bull run, you could see in a liquidity crunch this break support, come back to the 200-day and start to trade back down into this white supply zone area down here and back down towards the lower part of this rising broadening wedge at around 76 to $84. Don't be surprised if you get a quick flush on a big correction from its high to its low somewhere between 32 and 38% in oil. And then after you get this big correction, if that does happen, then you catapult up to the next leg of the bull run. You don't even have to come down that far. You could come down just to 91, $95 at the 200-day moving average in green in the daily time frame, and then move up. But if this is just something I'm watching as I'm starting to notice all the markets getting nervous as we're getting a liquidity crisis and a crunch about to take place. We have a banking problem taking place. We're going to continue to get more into that. You can see the crypto selling off. It all has to interlock with each other. And these are all things I'm watching out for you. Old Vincenzo, you can see Bitcoin's just stagnant right now where we've been. And to me, this could be a huge bearish continuation pattern in the daily time frame. You can see we've got kind of a pennant formation where we got your lower support or your upper resistance. We can use the wicks since this is such a short time frame. I don't usually use wicks, but we'll use the wicks. You got kind of a little pennant formation going on there, or a descending triangle, right? In a big consolidation. And this could, when this breaks down, could be the next leg down to 20,000, 21,000. But if we zoom in briefly, you can see you're running up against the blue ring again on a nice pump. You see that? But this has been a nice pump from earlier after the fake out to the downside. But right now you're hitting that blue ring, which has been major upper resistance, acting with the orange ring that's slightly above it. But every time you've been getting into this area, you've been selling off once, twice, three times, four times. So once we are in this area again, this could be a good time to short back down to the median range of the price. Right, so we'll watch out for this to see if it gets rejected. I don't notice much volume. If you want to get bullish, you got to break by all of these and then get above the orange ring and continue to hold that as support. Or you're gonna, if the pattern continues, you're gonna roll back down to 29,000 in the next few hours. So we'll watch out and see what happens with that. And the rest of the coins are doing the same thing. Algo is coming up to the 200-day moving average in the 15-minute. If you can get above that, you can try to make a run up here in a local time frame at about 44 cents. If you can't get rejected, you're going to trade back down to your lower support, which is where you were yesterday at about 39 cents. Dogecoin, same thing as Algo, you're at your 200-day. If you can get above, if you can get above Oh, that's way down there. If you can get above your 200-day moving average in green, you can make a run up here at 0.086 or just above 8.5 cents. If you get rejected by the 200-day in green, sitting there at about 8.3 cents or 8.25 cents, you're going to get rejected. Wow, this is a big area. And trade back down towards the 0.48 or the 0.059 or the 5 cent level. Your underneath supports that we got going on down there. See, that's where your regional bottom is down there at about 6.25 cents. And then if we look at XRP, you can see it looks like algo. It's been trending down. It's been getting forced down by the 200-day. If you want to try to get any kind of a bullish momentum for a brief swing trade or a rally, you got to break the 200-day, and that could get you 15% up to the 46 cents. If you keep getting rejected, it's going to force you down to this local bottom at 33 to 36 cents. The bottom part of the last line of defense, aka get my shit together. To the shit house, like, subscribe, and share. Peace and love. Peace and love.